types of investment funds. Fixed income fund and output. So this type of fund is particularly suitable for investors with a conservative personality who are willing to take on a lower return with less risk. Mutual investment fund. This type of fund is divided into multiple and different categories according to the characteristics of the markets in which it is invested and others. Higher risk in exchange for higher return. The principle of operation of this type of fund is to put money in stocks to achieve long-term capital growth in a wide range of industries and sectors, or at least one sector, and these funds are suitable to invest in them if the investor has a higher risk appetite and has a long-term financial goal. An index fund is one of the funds that has become very popular in the past few years and falls under the nickname index funds, as their investment strategy is based on the belief that it is very difficult and often expensive to try to beat the market constantly. So an index fund manager buys stocks that align with a major market index like the S&P 500 or the Dow Jones Industrial Average, to succeed. This strategy also requires less research from analysts and advisors, so it needs fewer expenses before it is passed on to shareholders, and these types of funds are often compatible with the situation of cost-sensitive investors. The prevalence of index funds. Index funds represent some of the most diversified investment vehicles in the market. Instead of picking and choosing different stocks, you can get a piece of everything. This strategy is characterized by the fact that it can generate consistent returns with less risk and is valuable to investors in the long run due to the simplicity of its strategy. But betting on long-term market trends can be a huge step in which few active managers and traders outperform benchmark indices for decades, yet an actively managed fund may earn more short-term gains than this one. Specialized fund. This type of fund focuses on a specific sector of the economy such as the financial, health, and technology sectors and forgoes broad diversification, so the funds of this sector can be very volatile because stocks in a particular sector tend to be closely related to each other, and there is potential for gains significant, but the sector may also collapse, for example, the financial sector in 2008 and 2009. This type of fund is divided into regional funds that focus on a specific geographic area of the world, such as a continent such as Latin America or an individual country such as Brazil only, and these funds are characterized by the fact that they facilitate the purchase of shares in foreign countries, which can be difficult and expensive, but you have to accept the high risk of loss if she entered the area and was in a bad slump. The second type is socially responsible, or ethical, funds found in companies that meet the criteria of certain guidelines or beliefs, for example, funds that specialize primarily in green technology, such as solar, wind or recycling, while staying away from some of the funds specializing in sin industries such as tobacco, liquor, weapons or nuclear energy, and the idea is to get competitive performance while maintaining a healthy investment. An index-linked fund whose units can be traded like stocks on an exchange. This type of fund is described as ETF, which is a term for tracking an index of a portfolio made up of individual securities. As with the previously mentioned mutual funds, when you buy an ETF, you can't choose a specific security instead. You can only choose a specific asset class, sector, country or specialized investment strategy. Two notable types of ETFs are leveraged ETFs, which track some multiple of the price of their underlying assets, and inverse ETFs, which track the opposite of their underlying assets. What distinguishes this type of fund is that you can invest in everything from stocks, bonds in the technology sector, and you can also buy and sell them easily, unlike traditional funds, and you can also buy a share of Apple, Nasdaq, Apple, and it tends to be a little cheaper than other types of traditional funds. Balanced investment fund. This type of fund specializes in investing between a mixture of stocks and bonds and fixed income securities to achieve a balance between achieving higher returns against the risk of losing money. Conservative funds hold fewer shares than bonds. Money market fund. In this fund, money is invested in short-term fixed income securities such as government bonds, treasury bills, bankers' acceptance, commercial paper and certificates of deposit, so they are safer than other funds.